Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como, and today is the 9th of June already. I was joking with my daughter, whose first year is in high school this year, and she only has 10 days of actual classes left, which is kind of scary for me, but she's very excited about it. So we're getting there. We're getting close to the end of this school year for those of you who have some uh, some smaller children. All right, let's get into what happened in ag markets today. Canola was up $1.30. Now I am reporting on the November here, and there's a reason for that. I'll explain that in a second. November settled 693.90 today. Um, just out of curiosity, I'm going to look at what did the July settled at 710. It was lower on the day, very marginally, like 80 cents, but settled 710. Nav settled 693. Again, I'll explain in a second why that's important. Minneapolis wheat down. Actually, all the wheat classes down pretty heavy today, as rains kind of hit some of the key wheat growing areas during a lot of the kernel filling areas or kernel filling times. We're down 12 and three quarter on the Minneapolis at 622 and a half. We do have crop condition ratings coming out later today in about an hour from when this is being recorded. If there's anything earth shattering, I'll report that to our premium subscribers. Otherwise, I'll just talk about it in tomorrow's video. Minneapolis wheat is expecting a 2-point bump to 52% good to excellent this week. So, and then much of the rest are expected to be unchanged. Kansas wheat down 11 and three quarter to 537 and a half. Chicago wheat down 12 and three quarter at 542. Soybeans down 1.25 cents at 1056. Corn down 9 at 433 and a half. The Canadian dollar is still trading above 73 cents at this time at 73.12. Live cattle up a bit, 219 and a quarter. Feeder cattle up a little bit as well at 311.65. All right, let's get into some of the charting here. Here is November canola. Now, November canola made a new high today. As a result, you may have, if you remember correctly, I had a Fibonacci retracement kind of graph on here previously. Now that we've made a new high, I think that becomes a little bit more obsolete as far as a retracement goes. New highs are always kind of on the bullish side. We are, trading well above the 20-day moving average again. So we didn't spend very much time down there below the 20-day moving average. 3 days, I think we closed below. We closed Friday above, and today we made a new high. Now, today's action could be considered more neutral. It looks more like a doji candle where the open and close were near the middle of the trading range with a longer wick on top and bottom, but still it made a new high today. So November did trade above or up to 700 today. So good action on the November, I would say. One of the things I wanted to call out here, and I'll just maybe use my fancy pen here. If you look at a couple of the metrics here, here's open interest and volume on the November. As you can see, we have now the open interest on the November has now surpassed the July. We're now at almost 120,000 contracts of open interest, 100,000 of open interest on the July. Those are still both pretty big, but we are seeing the November move into the front month, or what I call the front month contract. We got more volume off the November today too, 29.5 versus 22.1. So November is definitely acting as kind of the de facto market maker, I would call it. So when we look at what's happening in the markets today, up here, and even on the technical side where we saw a new high today, that gives me some confidence that there's that this has more meaning than what happened on the July today. So something to keep in mind in these markets is that the month sometimes matters, particularly when you're moving closer to the expiry of 1 month, like we are right now. We're only a couple of weeks away from the expiry on the July, so we'll continue to see that open interest in the NOV rise. We'll continue to see that volume in the NOV rise. It'll be interesting to see what happens with the spread here. Obviously, it contracted a little bit today. But if the NOV is going to change places with the July as the front month for the foreseeable future, or going forward from here, we might actually see some more convergence between those 2 months, which at this point, I would say favors the November. So just something to keep in mind as we move forward here. A quick bid sheet here from Bungie, Fort Saskatchewan, just to kind of showcase here their August or even their July. Sorry, they're still trading are quoting their Julys off of or June and July off of the N. August has moved to the X. They are 13 over off the X. So we're not that far away from the the market trading with some premiums on the basis side using the X as the front month contract. I think that will happen quickly here in the next week or so, particularly if we start to see some really big action on the November contract. So this is just an example here. I do kind of have a running bet happening right now with one of the sales reps at one of the grain companies, and my prediction is that we will see the front month contract trade above 680 with a 20 over basis, giving a a 700 cash price on the front month. And both of those things need to happen. So I know we've seen 700 cash price already based on just futures, but in order for me to win the bet, I need to see a 20 over basis off of the front month contract in order for me to win the bet. So I'm still confident that we'll see some action, positive action on the basis here, and I could still come out victorious. But it's been a bit of a slog. I thought it would have happened already. So anyway, moving forward, did want to talk a little bit about the January as well. We did close just over 700 on the January. We did, trade above 705 today. Our premium subscribers, or some of our premium subscribers, had target prices in for new crop canola at the $700 futures level. That got triggered today. That just kind of illustrates, some of the importance about using target prices. We're advocates for using target prices here, as well as, the conversations that we have with our premium customers. We do have some spots left in the, call it Wainwright, Vermilion, and the communities surrounding those areas, as well as far as our premium advisory service as well. So if you're interested in that and you are a watcher of these videos, then drop me a line and we can get you hooked up here. We do have a limited number of spots for that, and they are closing up pretty quickly. All right. Speaking of premium content here, to subscribe to our insights, go to CanadianAgMarkets.com /subscribe. I'll leave that link in the description. It'll take you to a site that looks like this. It is $99 per month. You can cancel anytime. We charge you only monthly, so you only pay for what you use. And, if you want to try us out for a few months and give us a shot, I'm very confident that you'll be happy. Our Friday report that went out to our clients this last week, we talked a lot about, we broke down a lot of the data that came out of the Canadian merchandise trade database, as well as we started, or not started, but we really took a deep dive on options, what all the pieces of the mean, and where some of the value is today in some of those options. So if you want in on stuff like that, subscribe to our premium content, only $99 a month. All right, let's get back into the markets here. July Minneapolis wheat. Well, as we mentioned, all the wheats took a bit of a spill today. A little bit concerning here, as it did trade above the 200-day moving average as we went into Friday. I thought that was really positive. The thing with weather season, though, right now is that, rainfall, even a change in the forecast can really muck around with these markets. I think that's what happened in wheat today. Is we saw some precipitation in the winter wheat belt. There's some expectation of increasing crop condition ratings for Minneapolis wheat. There was lots of precipitation in the northern plains of the U.S. over the weekend. We got hit with that here in Winnipeg as well. Lots of moisture here in the last little while. So I think that just kind of sunk the wheat market today. It still is in a upward kind of pattern. It hasn't broke this high from mid-March here, which would be 640. This is on the July, of course. So we are going to see this contract expire soon. But there is a carry in this market. It is in contango, which means that there is carries as we move forward through the months. So it's a little bit more of a healthier supplied market. But we are seeing a little bit of a bullish seasonal push here in the last little while. Can't say it's over yet based on the charts, but you never know. Okay, moving on to some weather. Here is the 72-hour observed accumulated precipitation. So that, as you can see here, there was quite a bit of moisture in southern Manitoba and even some of the areas of central Saskatchewan that needed it as well. So we got, a healthy dose, particularly here in Winnipeg over the last couple of days, and there were some heavier doses elsewhere as well. So some areas are getting rain. I know there's lots of concern still throughout the prairies. And, a lot of that concern is also not going to be rectified in the next few days. This is the 5-day forecast. Southeast Saskatchewan may get some rain. Some of these areas in, north central Saskatchewan might get some rain. There's a big pocket kind of dry here where a lot of our advisory customers are. But, still drier bias throughout much of the Canadian prairies. It's also been extremely windy, which has been difficult to get some spraying done, things like that. So, the weather isn't always 100% cooperative. Okay, as we move into some of the headlines, we reported on this previously, but Canada's, pea farmers are breathing a sigh of relief after India announced it's extending the duty-free access for yellow peas through next year, through March 31st of 2026. The exemption was set to expire at the end of May, so they did make a decision prior to the end of May to extend it. Analysts at the recent Global Pulse Confederations conference in Singapore this last week were forecasting that India will import about 1.2 million tons of peas in 2025-26, so this coming crop year. And the thought is that Canada could get quite a bit of that share because Russia will be busy supplying China. So, not a lot of people wanting to do business with Russia at this time. China does. Obviously, China has imposed tariffs on Canadian peas, limiting how much of our peas will go to China. So Russia will be taking care of China, and we will be exporting elsewhere. Probably the main exporter that we will see will be India, and the extension of this tariff exemption is a good sign that will continue healthily. There's a good article by Ed White today on canola and wheat acres. The prevailing thesis here in this report, they didn't put any numbers to it necessarily, but that there was a significant amount of canola that got shifted to spring wheat this year. I think the author of this, or the analyst that they quote in this, is from Manitoba. So I am worried that maybe Manitoba saw a bit more shift than some of the other provinces. A lot of the farmers that I talked to weren't looking at switching a huge amount of acres over. So again, they didn't put any numbers to this, but there is a risk that we will see some shifts in acres coming into the end of June when we see our acreage report happen then. All right, China. This is just more of a broader, macro story, but China's imports of major commodities has lost a lot of momentum in May. Crude oil, coal, iron ore, copper, all of those things are major imports, and they are declining amid, the economic woes that China is having right now. Crude oil imports dropped by about 6.2% in May from April. What were some of the others here? Coal down 4.7%, and iron or unwrought copper imports down 2.5%. So I think we'll probably see a kind of similar kind of pattern with agriculture commodities as well. Although soybean imports have been strong leading into this spring as well. All right, finally, game 3 today of Oilers versus Panthers. Let's go Oilers. It was a tough one on Friday, but we stayed up late to watch it, and we hope everybody has a good time watching it today. So that's all we have for you today. Have a great evening. We will see you again tomorrow.